Are you ready to start investing, but you're stuck on the sidelines, completely overwhelmed by 1,000 different options, and terrified of making one wrong move? Well, what if I told you there's a simple, proven way to own a piece of the entire stock market with a single investment, and that it can cost you less than your weekly coffee budget? In this video, I'm breaking down the best low-cost index funds for beginners that will put your money to work for you, turning small savings into serious long-term wealth. No confusing jargon, no crazy fees, just a straight line to building your financial future. Let's be real. The world of investing feels way too complicated. You hear buzzwords like bull markets, PE ratios, and derivatives, and you feel like you need a finance degree just to follow the conversation, let alone risk your own hard-earned money. That feeling, that analysis paralysis, is totally normal. In fact, it's the #1 reason people who want to build wealth end up doing absolutely nothing, leaving their cash in a savings account where it gets eaten alive by inflation every single year. The fear is real. The fear of picking the wrong stock, of losing it all in a market crash, or of getting ripped off by hidden fees. But here's the secret the financial world doesn't always shout from the rooftops. For most of us, the best way to invest is also the simplest. You don't need to be a stock-picking genius or a market timing wizard. You just need to know about one of the most powerful and yet beautifully simple tools ever created for the everyday investor: the low-cost index fund. And by the end of this video, you'll know exactly what they are, why they're so effective, and which ones you can use to start your investing journey today. The solution. What exactly is an index fund? So what is this magic solution I'm talking about? An index fund is just a type of investment that lets you buy hundreds or even thousands of stocks all at once. Picture it like this. You're at a giant farmer's market. Instead of trying to guess which single apple or orange is going to be the absolute tastiest, you buy a pre-made fruit basket. This basket has a little bit of everything the market has to offer. An index fund is your stock market fruit basket. Instead of trying to pick the next Amazon, you just buy a fund that owns a tiny piece of all the major companies. These funds are designed to track a market index. An index is really just a list of stocks that represents a part of the market. The most famous one is the S&P 500, which is just a list of 500 of the largest, most established companies in the US. Think Apple, Microsoft, Amazon, and Google. So when you buy an S&P 500 index fund, you instantly own a tiny slice of all 500 of those companies. Why index funds are a beginner's best friend? There are 3 main reasons why low-cost index funds are the undisputed champion for anyone just starting out. First, simplicity. You're not trying to predict the future. You are simply betting on the long-term growth of the overall economy. As long as you believe that big businesses will continue to innovate, grow, and make money, the value of your index fund is set to grow with them over time. It's the ultimate set it and forget it strategy that lets you build wealth without the stress of watching the market every day. Second, and this is the most critical part, is the low cost. Every fund charges a fee to run its operations, called an expense ratio. It's a percentage of your investment that you pay each year. With those actively managed funds, this fee can be 1%, maybe even 2%. That sounds small, right? But with index funds, because they're passive, the fees are microscopic. Third, built-in diversification. Remember our fruit basket? If one apple in there is a little bruised, it doesn't spoil the whole thing. It's the same with your index fund. If one of the 500 companies in your fund has a terrible year, it has a tiny impact on your overall portfolio. The how-to: mutual funds versus ETFs. Okay, so when you go to invest, you'll see index funds come in two main flavors: mutual funds and exchange-traded funds, ETFs. People love to debate which one is better, but honestly, for a beginner, the difference is tiny. Mutual funds are priced once per day after the market closes. Their big advantage is making it incredibly easy to set up automatic recurring investments. You can just tell your brokerage, "Hey, invest $100 into this fund on the first of every month." And it just happens. Automatically. ETFs trade like stocks, meaning their prices go up and down all day. And you can buy or sell them whenever the market is open. And thanks to something called fractional shares, you can now invest any dollar amount you want, even if you can't afford a full share. The best low-cost index funds for beginners in 2026. All right, let's get to the main event. Here are 3 of the best types of low-cost index funds you can buy to build a powerful portfolio. First, the Core Foundation, an S&P 500 index fund. Fidelity 500 Index Fund, FXAIX. Schwab S&P 500 Index Fund, SWPPX. Second, Maximum Diversification, a total stock market index fund. These funds pack in large, medium, and small companies, giving you exposure to thousands of stocks. Vanguard Total Stock Market, ETF, VTI. Third, the zero-fee game changer. In the race to the bottom on fees, one company did the unthinkable. They went to zero. Fidelity Zero, Large Cap Index Fund, FNILX. You truly can't go wrong starting with any of these. Don't spend weeks agonizing over it. Pick one, and let's move on to the most important part: actually getting started. Putting it all together. Your 4-step plan to start investing. Step 1. Open a brokerage account. This is just the account that holds your investments. It's free and takes about 10 minutes online. Step 2. Choose your fund and make your first investment. Step 3. Set up automatic investments. This is the secret sauce to building wealth on autopilot. Decide how much you can comfortably invest every week or month. Step 4. Turn on dividend reinvestment, DRIP. Many of the companies in your index fund pay out a portion of their profits to you, called dividends. Your brokerage will ask if you want to automatically reinvest those dividends to buy even more shares of the fund. The answer is always yes. This creates a powerful compounding effect where your investments start generating their own investments. It's like a snowball of wealth rolling downhill. If you got any value out of this breakdown, do me a huge favor and hit that like button. It takes 1 second, but it tells the YouTube algorithm that this is good info and helps other beginners just like you find the video. And if you have any questions, and I mean any at all, drop them in the comments below. I read every single one and would love to help you get started on your journey. The biggest thing I want you to take away from this is that investing is not nearly as complicated or as scary as you've been led to believe. You don't need to be an expert. You don't need a lot of money. You just need a simple plan and the discipline to stick with it. Low-cost index funds are that plan. They're a straightforward, proven, and powerful tool that lets you turn small, consistent savings into life-changing wealth over time. You're betting on human innovation, economic growth, and the undeniable power of time. So forget the jargon and forget the fear of making a mistake. The only real mistake is letting that fear keep you on the sidelines any longer. The best time to invest was yesterday. The second best time is today. Take that first step, open your account, and let your money finally start working for you.